going on, guys? Biggest Bullish Investor back with another video. I know it's been a long time since we've last talked. Our last video was back in November, where the portfolio was sitting at $76,839.81. The portfolio has seen a massive growth with everything that was going on in the stock market, so I figured today we would take a look at it before the portfolio potentially hits $100,000. So without further ado, let's get right into the numbers. On Friday, as you can see, this portfolio sold off a little bit. We sold off and we lost $1,084.37 for 1.13% loss. However, we gained $281.58 during after-hours trading. For the week, we were down $538.21. Our highest point, the portfolio reached $98,789.62. So we were up almost $3,000 and with a 3% gain, and then we gave it all back as the market started to sell off. For the month, we're up $2,831.66 for a 3.06% return. For the last 3 months, we're up $8,767.84 for a 10.12% return. For the year, back in November, our gain for the year was $5,742.63. We are now sitting at a $22,042.64 return, or 30.5% for the year. Our all-time back in November was $15,619.15. We're now sitting at a $27,121.03 return, or 39.72%. Our holdings, quite a bit has changed, and I will explain everything. However, I'll just go for a broad view of what we are currently holding in our portfolio. And we'll go to the gains and losses. Let's take a quick gander at the gains and losses. All right. And now we will go into each company one by one. We'll start off with Berkshire Hathaway. Back in November, Berkshire Hathaway was trading at $227.42, of which we had 128 shares of Berkshire Hathaway. Our position is still the same. And Berkshire Hathaway is now trading at $240.49. Our return in November was $5,353.01 for a 22.53% return. We're now sitting at a $7,025.97 return, or 29.57%. Berkshire Hathaway back in November held a 37.96% portfolio diversity for us. It is now sitting at a 32.27% weight for our portfolio. Berkshire Hathaway released its annual letter over the weekend, which it stated that it brought back $9 billion worth of its own company, as well as, well, we've known this for about 2 weeks now, the company added shares of Chevron and Verizon into its portfolio. We are currently not adding any additional shares of Berkshire Hathaway at this time. We will sit back and just let the company continue to show us great gains. Next is Apple. Last time we talked, Apple was sitting at $119.25. At which time we held 146 shares of Apple. We have brought from that time 64 additional shares, bringing our total shares to 200 shares. We were enjoying a $1,087.86 return, or a 6.66% return with Apple. Currently, we have a $958.46 return, or 4.1. Our average cost back in November was for $111.80. So we have bumped the average cost up to $116.91. Our portfolio diversity with Apple is now 25.52%. Back in November, it was 22.71%. We have gained where we wanted to be in Apple with 200 shares. However, with the market selling off recently, as you can look, Apple has been in a big downtrend. If Apple continues this downtrend and we hit that average cost of $116, we will continue to load the boat with Apple. I will also go over a strategy that I expect to employ once the portfolio hits $100,000. So for now, that's all with Apple. It all depends on how the market continues to treat Apple. We'll determine if we'll add any additional shares to Apple. Next is a big winner. We have Disney. Disney is currently trading at $189.90. Back in November, it was trading at $138.38. We have the same position at 127 shares. Back in November, our gain for Disney was $3,362.93, or 23.66% return. Our return, however, today is $9,905.97, or 69.7% return. The portfolio weight in Disney back in November was 22.92%. It now sits at 25.28% weight in our portfolio. Disney had an investor day back in November where they stated that they had 94 million paid subscribers, which is fantastic. They are smashing their numbers with that. Once the parks become to get back online and the company starts receiving revenue from all of its businesses, I definitely believe Disney will far exceed $200. That's just my opinion. Those are my thoughts. I'm not a financial advisor, so please don't hold anything that I am saying. This is just for entertainment purposes. But I definitely believe that Disney, in my opinion, will hit over $200. So I will continue to hold this company and enjoy the growth. Next is Bank of America. Bank of America is trading currently at $34.83. Back in November, it was trading at $27.02. We still have the same amount of shares at 327 shares. Back in November, we had a return of $1,166.02 for a 15.2% return. We're now sitting at a $3,719.89, or a 48.5% return. Bank of America's weight in our portfolio slightly increased, as back in November it was 11.52%. It is now at 11.94%. There is no big news with Bank of America. This is just a fantastic company. I will continue to hold while it will eventually start to increase its dividends, that I believe, as well as the amount of share buybacks it creates will give me bigger percentage ownage of this company. So I will just continue to hold Bank of America, enjoy those sweet dividends that it gives me, and the growth. So that is it. I have to back out because the next company I want to talk about is Apple Hospitality, as we sold out. That was one of the companies, well, the only company that we actually sold out of since the last time I talked to you. Apple Hospitalities, this was a pure dividend play that we were holding the stock for. As you can see, the company is trading at $14.25. We had 245 shares of this company, of which we sold when the company was trading. We sold on February 22nd at $15.03. So that was actually a pretty good trade. it was a pretty good trade as far as where the stock is trading at now. Um, However, we still took a loss. We took a loss of about $370. But if you factor in how long I was holding the stock and the amount of dividends that I was receiving from the stock, I received about $500 worth of dividends. So it was a slight gain, but for the amount of time that I've held the company, which was over 3 years, there was no growth or anything else like that in the stock. So it was a loss of money in my eyes. So I was just happy to get out at $15.03. What we did with that $3,682 that we received from the company, we brought 100 shares of IPOE, which will turn into SoFi. SoFi Financial, that is a company that I definitely believe in after doing my due diligence and research. It's a company that I definitely want to buy into. We brought into it kind of high on the dip of $22. However, the company has continued to dip past the $22. It was trading at 20 it's like $28, $27.50, and then when it dipped onto $22, we brought the company and it's dipped a little bit more. So I do not mind adding a couple shares extra of IPOE. I think they have till the end of March to transform this company into SoFi. So I will continue to add to the company as long as it is underneath my average cost. So how I plan on doing that with this company is once my portfolio reaches $100,000, I will take on a little bit of margin and I will be adding a few shares to SoFi if it's below my average cost. And another company that I want to add on some margin is Rocket Companies. My only worry with that is I hold Bank of America, and if I hold SoFi and Rocket, I think that will be a little bit more. I won't be that comfortable with holding that many financial positions in my portfolio. So I still have to think about what I want to do with that. Now, our company that we have been adding into each week is Walmart. Walmart, the companies after Apple that we wanted to add into, we weren't sure what we were going to buy, whether it was Walmart, Johnson and Johnson, or Airbnb. Those were the three companies that we were considering. We chose Walmart because of the opportunity that Walmart presented once it had its investor call, and the street didn't like what Walmart was saying, as it said that it believed that they were basically going to almost chalk this year up to no additional net growth with its earnings. So the street didn't like that, and I saw that as an opportunity to buy into Walmart at a fantastic deal. However, I am still bullish on Johnson and Johnson. I really just want to hurry up and finish the buying in Walmart. I try and add $100 to $200 a week into my portfolio, and I just want to get up to at least 100 shares of Walmart, and then hopefully get into Johnson and Johnson. But I'm a patient person, as you guys can see in my portfolio. So, like I said, we buy a share of Walmart each week. Our goal is to get 100 shares of Walmart and then go from there and see how we feel once we attack our position. We will not, if we do employ that, margin rule, we don't want to really buy Walmart on margin. Once we establish the position that we want, that's when we want to maybe, okay, like for instance, if we go back into Apple, if we have $100,000 and Apple dips below our average cost, we will use the margin to increase the share value of Apple, and then we'll probably buy 100 shares on margin and then sell covered calls with that 100 shares just to get a better average cost into Apple. And that is the strategy that I want to employ. The last company is a laggard that I don't know what I'm going to do with is Aurora Cannabis. Aurora Cannabis, there's no real change here. We had 100 shares. The price did, however, increase when the market started acting crazy and the marijuana stocks jumped up along with GameStop and all the other crazy companies. But the last time we talked, Aurora Cannabis was trading at $7.19 for a $3,612.65 loss, or 83.4%. We are now sitting at a $3,271 loss and 65 cents for 75.53% loss. We still have a $1,000 in this company, but I'd rather just wait and see what's going on. I know that our average cost is way too high, and I know I don't think that this stock will ever hit $43. So we will have to chalk up to a loss. We just have to figure out how much of a loss we will be chalking up in this company. But other than that, I appreciate you guys checking out the video. I will show you guys the gains and losses one more time before we go. And this is our portfolio. If you have any questions, comments, and concerns regarding this portfolio, please feel free to let me know. Other than that, thank you. This is Biggest Bullish Investor signing out.